The greatest investor in history is making nearly $15 billion a year without building a new company, without launching a new product, and without even buying many stocks. But here's the terrifying part. While millions of Americans are throwing money into AI stocks, meme rallies, and risky investments in 2026, Warren Buffett is doing the exact opposite. He's hoarding cash, and not just a little cash. We're talking about a mountain so massive it's approaching $400 billion. Now ask yourself this: what does Warren Buffett see that everyone else is ignoring? Because history shows something chilling. Whenever Buffett starts stacking cash like this, Wall Street usually learns the reason later, and by then, it's too late. Before we continue, subscribe now because this channel breaks down the financial moves the media notices too late, and this Buffett warning might be one of the biggest stories of 2026. For decades, investors repeated the same phrase: cash is trash. The logic sounded simple. If inflation rises, cash loses value. If the stock market rallies, cash underperforms. And if everyone else is getting rich while you hold cash, you feel left behind. So people stopped respecting cash. They treated it like dead money. But in 2026, something changed. For the first time in years, cash is paying real money again. And Buffett moved before most people even noticed. Right now, Berkshire Hathaway is parking huge amounts of money into short-term U.S. Treasury bills. Safe government-backed assets. Boring, predictable, low drama. But those Treasury bills are now paying around 4 to 5% yields. And when you're Warren Buffett, that changes everything. Because at 5% interest, every $100 billion generates roughly $5 billion per year. Now imagine what happens when you're holding almost $400 billion. Suddenly, Buffett is earning billions simply by waiting. No risky trades, no gambling on hype, no chasing trends, just patience. And that patience is now generating more money than many giant corporations make from actually selling products. That's why Wall Street is starting to panic, because Buffett has seen this movie before. He watched the dot-com bubble explode. He survived the 2008 financial collapse. He saw the COVID panic wipe trillions off the market. And every single time, one thing stayed true. When markets become dangerously expensive, Buffett stops chasing. He waits. That's exactly what makes this moment so strange. While social media influencers scream, "Buy the dip," while retail traders throw money into volatile stocks, Buffett keeps selling. Quarter after quarter, Berkshire Hathaway has been reducing stock holdings and increasing cash reserves. At first, people mocked him. They said he was too old, too cautious, too disconnected from modern markets. But now, the same people are starting to wonder if Buffett saw something coming before everyone else did. Because here's the reality most investors don't want to hear. The market in 2026 feels unstoppable.
Stocks are exploding.
Speculation is everywhere, and many investors now believe stocks can only go higher. But that exact mindset has appeared before almost every major crash in history. Right before the dot-com crash, investors believed technology would change everything forever. Right before the housing collapse, people believed real estate could never fall nationally. And today, many people believe AI and endless liquidity will keep markets rising forever. Buffett doesn't invest based on excitement. He invests based on value. And right now, he may believe there simply aren't enough good deals worth buying. That's the scary part, because Buffett usually becomes aggressive only when everyone else is terrified. In 2008, when banks were collapsing and panic spread across Wall Street, Buffett stepped in with billions. But today, he's not rushing into the market. He's waiting. And when Warren Buffett waits this patiently, investors pay attention. Some analysts now believe Berkshire Hathaway's Treasury holdings are so massive that the company owns a meaningful percentage of the entire short-term Treasury market. Think about that for a second. One company is earning billions from safe interest while the rest of the market takes massive risks trying to beat inflation. That completely changes the meaning of cash. Cash is no longer sitting idle. Cash is now producing giant returns while also giving Buffett something even more important: freedom. Because if the market crashes tomorrow, Buffett will have something almost nobody else has: liquidity. He'll be able to buy great companies at discount prices while others panic. And that may be the real reason he's doing this. Not fear, preparation. Because Buffett understands something most investors forget during bull markets. Opportunities appear when everyone else runs out of money. So maybe this isn't about avoiding the market. Maybe it's about being ready for what comes next. And if history repeats itself, Buffett's patience could once again make him even richer while everyone else scrambles to survive. The question is, if the greatest investor alive is choosing cash over hype right now, should investors be paying closer attention? Subscribe now for more powerful financial stories, market warnings, and investing psychology breakdowns, because the smartest moves on Wall Street usually look boring right before they become legendary.